Hi, I'm Jennifer Kenning, the CEO and co-founder of Align Impact. We exist so the planet works for 7.8 billion people, not at the expense of the planet. We are deeply committed to impact investing, to building strategies across a full range of asset classes, risk and return expectations, and impact goals. This expertise is uniquely positioned us to provide educational overviews for organizations like SVP on a full spectrum of interest areas, asset allocation strategies, and return expectations, as well as narrowing the areas that you care about as an organization. Our holistic approach is in finding solutions that serve broad ranges of objectives, high impact opportunities, in the private markets and in the public ESG integration that allow us to consider and help you look at every lever that you have in order to drive the change that you want to see in the world. In this first section, I'm going to focus on debunking some myths around impact investing. We believe that there are 5 myths in impact investing. But before I get there, let's start with, what do I mean when I say impact investing? We're looking for investments that have both an intentionality around financial returns as well as a positive social and or environmental return back to society, and that we can actively measure it. If we're not measuring it, we're not actually going to have any impact to be able to deliver on. That's the difference between an impact investment and a traditional investment. I often say to people, let's discover why we want to move capital in this direction. Find your own why. What are the changes that you want to see in the world? What are the values that your organization aligns across, or that you and your family align across generations? What's the role that you play in your communities? What does capital mean to you? What does capital mean to the world? Is philanthropy alone enough to make those changes happen? I'm going to dispel that in myth number 4. What is our responsibility to society as the stewards of capital for charitable purposes and our role with our investment capital? So let's dive in. We believe that there are 5 myths that we need to overcome. So let's dive in with myth number 1. Myth number 1 is that impact investing is a fad and not a long-term trend or broad adoption that's here to stay. This is absolutely not true. Impact investing is a long-term trend, and data is illustrating that with strong investor demand. The amount of capital allocated between January and August of this year alone is double what we invested in 2019. The growth has been substantial over the last 5 to 10 years. According to the Forum for Sustainable and Responsible Investing, SRI, assets have more than tripled in the past 6 years, going from $3.7 trillion in 2012 to $12 trillion at the end of 18, and we'll measure it again at the end of 20. 75% of individual investors and organizations have reviewed their investment portfolio for ESG, integration, and impact. This is not just a phenomenon in the United States. Actually, we're lagging. We lag Europe, Canada, Australia, New Zealand, and Japan are making huge strides in this direction. You might be asking, why is there such growth? Who's driving it? It's women, millennials, Generation Z. They deeply care about generating returns as well as making sure we protect the planet and that we give equal opportunity to all human beings. Foundations play an extraordinary role, but haven't yet started to scratch the surface. We have almost $1 trillion in US private foundations, but only 7.5% of assets apply one or more ESG criteria to their lens. And the top 15 foundations move less than 1% of their allocation towards mission-related investments. You might ask, well, why is this so important? Because foundations are really well positioned to use blended finance structures to really drive the change that we need to see to solve the world's most complex problems. Foundations can be just strategic. They have patient capital and they have multiple buckets in which they can lead from. Myth number 2, there's only a few investment opportunities. That's not accurate at all. There's thousands. We're seeing many large asset managers enter this space, from BlackRock, TIAA-CREF, PIMCO, Dimensional Fund Advisors, and more. We've seen almost every large private equity firm in the world come into this space over the last 3 to 5 years. TPG Growth launched its Impact Rise Fund 1 in 2017, raising over $2 billion. It's on its way to raising $2.5 billion in Rise Fund 2 by the end of this year in a very tough investing environment. Bain Capital invested $390 million in their Double Impact Fund in 2017 and plans to double that to $600 million by the end of 2020 in Fund 2. Every large wealth platform is addressing this, from UBS to JP Morgan to Morgan Stanley and Goldman Sachs, and the list goes on. Major institutions, endowments are divesting. They're divesting billion-dollar endowments from fossil-free investments, from pension funds. This is huge because it allows large capital investors to divest and move their investments towards a renewable economy that actually will help us thrive for many decades to come. If you look at the ever-expanding opportunities, you have opportunities across different types of capital and different issue areas. As you will see on slide 15 of the deck that you were provided, we have solutions across many different issue areas and many different ways of financing them. My position on this is that by 2025, you'll see no gray boxes where we don't have a solution, because we will innovate new financing tools in order to solve the problem. We need these types of investments. Both from a climate perspective, we need to invest billions and trillions of dollars towards climate issues over the next 10 and 20 years. But we also have population growth by 2030 of 8.5 billion people. How do we feed them? How do we make sure they have the right access to healthcare, economic opportunities, housing, and the list goes on. If you look at myth number 3, it's that you're going to sacrifice financial performance if you make these types of investments. It's just not true. If you look at 10 years of data from both academic institutions, asset managers, as well as industry data providers, what you'll see is that these investments do hold up. They do perform in line or better than than traditional investments. The cost of capital is shown to be a key driver. They have better operational performance. The stock price is positively influenced. We can go on and on. If you look at slide 20, what I'm showing you here is the MSCI All Country World Index ESG compared to the MSCI All Country World Index that's non-ESG. And what you'll see is that it tracks pretty much right on top, and you're starting to see outperformance as you go into 2016 and beyond. Myth number 4, and probably my favorite myth, is that we cannot no longer keep our philanthropy dollars separate from our investment dollars. We need all foundations, donor advised funds, large families and individuals to start using all of their dollars to tackle these problems. We have $410 to $430 billion that is invested annually in philanthropic organizations. Yet we have $186 trillion in the capital markets, global capital markets. What if we started using all of those assets to tackle systems change, to really drive change for everyone? There's not just one way to do impact investing. You can divest, you can invest, you can engage. And we believe if you're going to divest from things that contradict your values, please also engage with those corporations to change your behavior. And last but certainly not least, myth number 5, that this is only for the wealthy or only for large sovereign wealth funds or pension funds. It's not. It's a global movement. It's not going away. It's continuing to build steam because we have to. Most of our systems, as we've learned over the last 7 months during the COVID pandemic, are broken. In myth number 5, what we're trying to point out is we need to move from a shareholder capitalism model to a stakeholder capitalism model. 181 leading CEOs from major corporations around the world agreed that business should benefit customers, employees, suppliers, communities, and shareholders. Join in that movement. This isn't going away. This is here to stay. And I believe that if we invest this way, you will be rewarded as an investor. You will drive your mission forward much more substantially than just using your philanthropic capital. And we will be able to tackle the major issues that we see in the world today, 10 years from now, and ultimately have a different system 20 years from now in how the world works for everyone. So let's turn our focus to social justice or racial injustice in this country. What do I mean by social justice? Social justice in terms of distribution of wealth, opportunities, and privilege within society. We're going to look at this from 3 different lenses: race, gender, and economic inequality. Our approach will be to focus on what we can achieve across a spectrum of capital so that we can actually achieve social justice once and for all. Now, I'm not promising you're going to be able to do it in a year or even in a decade. These systems have been built over 400 years, but they really are driven off of certain themes that perpetuate them. So let's start with how we look at racial injustice in this country. When we think about racial injustice in this country, we're looking at it from really 7 different sectors: financial inclusion, affordable housing, education and workforce development, leadership, food, health, and criminal justice reform, legal and criminal justice, and culture and community. I'm quite certain that everyone has a why that they can find inside of one of these 7 approaches. If you go to slide 36, what we're showing you here is that along the horizontal axis, you have the different issue areas that you may be focused on. Maybe you're focused on affordable housing in your local community. Maybe you're focused on let's provide better food for the 13.8% of America that lives in a food desert. Or maybe you're focused on how do we actually really reform our criminal and legal justice system. You have opportunities across philanthropic, advocacy, and investments. Across the vertical column, we're showing you how it relates to both racial, gender, and economic justice. And we're showing you different ways in which you can approach these issues. When we think about philanthropy, we think about investments in philanthropy dollars should complement each other to empower people to thrive. And As You Sow is a great example. There's some examples in the section 4 of myths and realities. As You Sow is a great example of supporting the private sector through shareholder advocacy focused on gender and racial equity. The nonprofit accelerators that you can find in the appendix are another great way for philanthropy to empower and generate diversity in entrepreneurship and bridging the pioneer gap and the funding gap. Second, we look at funding certain things that are not going to get funding. Not only do we have food deserts, but we have funding deserts in this country. What do I mean by funding deserts? Most of our funding in the private equity and venture space is done in 3 areas: California, Massachusetts, and New York. 85% of venture dollars go to those 3 states. These states only make up 20% of the population. This is why we need to start working with community development finance institutions, local banks, and funding people of color and women. And the third point I'd like to address is that we really want to empower you in your due diligence process to start looking at these, whether it's an investment process or a philanthropy process, not just through the lens of race and gender and economic justice for the beneficiary, but what are we doing to break down the unconscious biases around selecting fund managers and entrepreneurs to back? It truly is a combination of all 3 if you're going to have a great DEI strategy: funds, enterprise, and the beneficiary. And verifying that people who are creating solutions for the marginalized communities in our society reflect those communities and understand those communities. So let's go to a deep dive into one or two examples so that you can actually implement this in your own portfolio. So if we're talking about racial justice and we're saying, how do we actually bridge the divide? You might be looking at, if you go to slide 38, the stat around housing. Black people comprise of 13% of the population, but more than 40% of the homeless population. We don't have enough access to affordable housing, Section 8 housing. We as investors can invest in this asset class. We can invest in real estate and get competitive returns equal to traditional real estate. But it requires us to actually look at who are we looking to serve and how are we going to do that. We believe affordable housing is one of the best ways that you can actually start to break down these social injustice, wrap around certain services that will actually tackle other issues like education, food, and health, as well as help people have strong incomes, as well as start to build wealth, which will then reduce hopefully the poverty line or the poverty that we experience in the United States. If you look at COVID specifically over the last 7 months, the CDC reports that startling disproportionate number of Black Americans in the US have passed away from COVID. In Chicago, Black people account for 70% of the deaths, but they're only 30% of the population. We need to fix our healthcare system. We need a healthcare system that's proactive, that's telehealth, that addresses mental health, that helps people actually get to health and well-being before they're sick. Forbes estimates that 90% of businesses led by people of color and serving Black and brown communities have been shut out of the Payment Protection Program, known as PPP. We're building disenfranchised communities across the United States. We need to close that gap. We need to help people get access to the right childcare options, at-home safety, safe homes, affordable homes. How do we educate them when we're in this homeschooling environment? So if you go to slide 41, what we're showing you here is the way you can do this across investments and philanthropy, as well as the different issue areas. At the top are more investable options, and at the bottom are less investable options. If you go to slide 42, what we're showing you here is that you have an array of investment options that you're able to invest in. 3 CDFIs, they have different objectives. They're focused on different underlying project finances or communities. You can invest in a fund that focuses on venture capital and loaning to people of color and led by people of color. I already mentioned affordable housing, and last but not least, you have an array of options in your fixed income portfolio. Ask your fixed income manager, how can I actually look to see what are the ESG qualities of my issuers, as well as what are the use of proceeds of how I'm lending my money out. I want to touch on CDFIs, and then I'm going to close this out with 3 calls to action. CDFIs play a critical role. They've been around for almost 30 plus years. They're here to help us generate economic growth in low-income communities by empowering low-income and underserved communities to enter the financial mainstream. It's a bridge between Wall Street and Main Street. They serve a critical purpose, and you have lots of CDFIs, you have well over 1,000 that are focused on serving your community. So look to see where you can partner with these organizations, with their loan funds, or credit unions, or venture cap facilities, so that your money can drive the change you want to see in your local community. I touched a lot on social and racial justice. This doesn't exclude women. Women are at a big disadvantage. I want to leave you with one stat that I think is staggering, and I hope that if you take anything from this presentation, it's that one of these stats drives you to change. The World Economic Forum estimates that it'll take another 200 years to close the gender divide. That's participation in the economy, pay, and opportunity in middle management, senior management at the C-level in the workplace. 200 years. We don't have 200 years to wait. 865,000 women have left the workforce in the last 7 months alone, because the demands at home and homeschooling their kids and lack of childcare and other things have it not make sense for them to return to the workforce. This has huge implications for us over the next decade. So I leave you with 3 tips. One is look at your portfolio, look at your grants, look at your endowment, your investment capital. Pick something that you're invested in and look to say, what do they actually own? How am I supporting the initiatives that I actually care about? And engage with that company or fund or mutual fund. Tip number 2 is look to see, are you using all of the levers that you possess to be able to drive the world you want to see? You have a mission or a why. Do your investments, your grant capital, your consumption, and where you use your voice and your social networks align? And point number 3, hopefully I've dispelled the myths, is that we need everyone. Everyone can take action. You might think that the climate is too far gone, or it's too big, or I don't have enough capital, but you too can play a role. Look at your carbon tracking and see how much carbon you're emitting, and then see where you can reduce it at home, in how you travel, in what you eat. Because if all 7.8 billion people collectively work together to drive a society forward so that it works for everyone, we would live in a radically different world than we live in today. If not now, when? Our capital is one of the most powerful tools we have, and capitalism in the right form, looking at all stakeholders, can actually drive the change we're seeking and complement our philanthropic endeavors. You can find more about us at alignimpact.com. You can follow us on Twitter. And if you're inclined to find some action items, we have a newsletter where we provide you with action items quarterly. Thank you so much to SVP Dallas and bigBANG, and we hope you have a great rest of your conference.